Bienvenido a Finance with Avery. In this video, I'm going to give an overview of major bank stocks that have increased their dividend after the Federal Reserve stress test. So 7 of the top 10 largest banks in the United States, based on total assets, have announced a dividend increase. Some of them are still subject to board approval, but typically that's going to go through fine and everything. Unless it was like a really crazy dividend increase that didn't justify, with their financials or something, then it might, not go through the board. But these dividend increases, nothing's crazy or too out there or anything. And the Federal Reserve stated that 23 of the biggest banks weathered the severe recession scenario in their stress test. And some of the banks are getting kind of frustrated with the Federal Reserve stress test, and some of the components are part of it, but they're surviving it, they're getting through it. So you might be thinking like, okay, what is a stress test? Some of you are watching the video, you know what a stress test is. I won't do a deep dive into it, but I'll give you an overview what a stress test is for the Federal Reserve. So basically, the Federal Reserve stress test is an analysis to determine if a bank has enough capital to withstand a negative economic shock like a recession, a real estate crash, or something like that. So basically, it's hypothetical scenarios that are placed in an analysis by the Federal Reserve that they run the banks through, with their financials and everything, to see what the outcome is, to see if the bank could handle something significant happening to the economy, see if they have enough capital to be able to, keep doing business as usual, keep lending and things like that. In this video, I'm just focusing on the major banks that increased their stock dividend after the results of the stress test. Some of the banks came out like a day or two after and announced, dividend increase. And then some of the banks a few days later announced their dividend increase. Typically with the banks and the stress test, they kind of wait until they get the okay from the Federal Reserve that they can like raise their dividend or do buybacks and things like that. When there were some kind of rough moments with stress testing in previous years, banks did not raise dividends. They did not do buybacks. They couldn't, basically, because, the results of the stress test. However, this year, with the banks doing pretty well in the stress test and everything, surviving it and doing great, some of the banks realized, hey, we're doing good enough. We can raise the dividend. And, raising a dividend is a way that companies kind of give back to investors, saying like, thank you for investing in us. Here's an increase. Some stocks have been increasing dividends for, 5 years, 10 years, 15 years, 50 years, 20 years. So there's different ways to give back to your investors, and increasing the dividend is one way. Also, buying back shares is another way. And buying back shares basically reduces the total amount of shares available in the market, which makes the shares that you own more valuable because there's less shares. So you own more percentage of the company now when there's less shares available. So that's another way that banks do this. But right now, let's jump into the 7 largest banks in the United States that have raised their dividend. I'm going to tell you about what it was before the stress test and what they have announced after the stress test that they're going to be raising their dividend to, including the new dividend yield. Let's get into it. JPMorgan Chase, also known as Chase Bank, JPMorgan, different people call it, different names. Some people give it the full name, JPMorgan Chase, ticker symbol JPM. Their prior quarterly dividend was $1 per share. Their payout ratio is 29.52%. Basically, a payout ratio is the amount of their cash flow that they're paying out to the dividend. Different people have different amounts, what they say is a good payout ratio. And it really depends on what kind of company it is. Some companies have higher payout ratios because they have to, like REITs, real estate investment trust. But some companies, try to have a lower payout ratio. And, you look for different things with a lower payout ratio, whether it's a dividend growth stock, you're like, oh, if it's got a lower payout ratio, it has room to grow that dividend because it can just easily pay out that dividend. So some people say, they want to see it under 30, under 40, under 50. It kind of depends on what kind of company it is. But right here, JPMorgan Chase, their payout ratio is 29.52%. The dividend yield was 2.77%. And so now they've increased their quarterly dividend to $1.05 per share. So the annual dividend would be $4.20 per share. So their new dividend yield with this increase is now at 2.91% at the current stock price of $144.34. And so, for example, here, 100 shares of JPMorgan Chase, ticker symbol JPM, would cost you around $14,434 at the current stock price. It would pay $105 quarterly with the new dividend. And next here we have Morgan Stanley. Their prior quarterly dividend was 77.5 cents per share with a payout ratio of 51.77% and a dividend yield of 3.72%. Now they have announced an increase of their dividend quarterly to 85 cents per share, which would be an annual dividend of $3.40 per share. The new dividend yield on that would be 4.07% at the current stock price of $83.36. For example, with this, when 100 shares of Morgan Stanley, ticker symbol MS, would cost you around $8,336 at the current stock price and would pay $85 quarterly with the new dividend. And next up here we have Wells Fargo. Their prior quarterly dividend was 30 cents per share with a payout ratio of 34.38%, with a dividend yield of 2.8%. They have announced an increase to their quarterly dividend to 35 cents per share, which would be an annual dividend of $1.40 per share, with a new dividend yield of 3.27% at the current stock price of $42.77. Now, 100 shares of Wells Fargo, ticker symbol WFC, would cost you around $4,277 at the current stock price and would pay $35 quarterly with the new dividend. And now we have Citigroup, also known as Citibank. Some people call it, that's their banking division, basically, it's Citibank. So when you see Citibank, that's Citigroup. And when you see Citigroup, that's Citibank, basically. So yeah, their prior quarterly dividend was 51 cents per share with a payout ratio of 28.40%. And a dividend yield of 4.5%. Now, they've announced an increase to their quarterly dividend of 53 cents per share, which would make that annual dividend $2.12 per share, with a new dividend yield of 4.63% at the current stock price of $45.74. For an example with this one, 100 shares of Citigroup, ticker symbol C, cost you $4,574 at the current stock price and would pay $53 quarterly with the new dividend. Now, this is a stock that I do own currently. I just started a small position in it and I'm working on increasing that. I'm currently down around 3.48% in that. You see my average cost right there. Put it up on the screen. It's $47.42. So it's definitely, a little down right there. But like I said, just a very small position and I'm working on adding to this for sure. Done some analysis on Citigroup. This isn't financial advice or anything like that. Do your own due diligence, about I definitely, for dividend portfolios, it's definitely nice to have a couple banks in your portfolio because and a couple of well-funded, financially sound banks. Let's not just say any banks. You definitely want to have strong banks in your portfolio. So there's another bank stock on this list that I do own that I haven't got to yet. So I'll tell you about that one when I get there. But yeah, Citigroup is one that I'm working on increasing the position in. Currently down a little bit, but I'm going to work on bringing my average cost down right now. The stock price, like I said, is lower than what I have it at. So I'm going to be adding to my position right there for sure. So yeah, that is the information of the dividend increase for Citigroup. And next here we have Goldman Sachs, ticker symbol GS. Their prior quarterly dividend is $2.50 per share with a payout ratio of 35.60% and a dividend yield of 3.19%. They have announced an increase to their quarterly dividend at $2.75 per share with an annual dividend of $11 per share. Their new dividend yield would be 3.49% at the current stock price of $315.17. So an example with this one, 100 shares of Goldman Sachs, ticker symbol GS, costing $31,517 at the current stock price would pay $275 quarterly with the new dividend. And the next bank right here announcing a dividend increase is PNC Financial. Their prior quarterly dividend is $1.50 per share with a payout ratio of 41%. And a dividend yield of 4.77%. And they've announced an increase to their quarterly dividend at $1.55 per share, which will make that annual dividend $6.20 per share, with a new dividend yield of 4.94% at the current stock price of $125.61. An example with this one, 100 shares of PNC costing $12,561 at the current stock price would pay $155 quarterly with the new dividend. And last but not least is Bank of America. Their prior quarterly dividend was 22 cents per share with a payout ratio of 26.31% and a dividend yield of 3.11%. They've announced an increase to their quarterly dividend to 24 cents per share, which would make the annual dividend 96 cents per share with a new dividend yield of 3.36% at the current stock price of $28.53. Example for this, when 100 shares of Bank of America, ticker symbol BAC, costing $2,853 at the current stock price, would pay $24 quarterly with the new dividend. And Bank of America is a stock that I currently own. As you see right here on the screen, I'll put it up there. My average cost is $26.34 and have a positive return of 8.49%. And so this is one that I definitely want to add my position to, but however, it would drive my average cost up, but that's just part of investing. I like to try to invest in the ups and the downs of the market, and I try to put more in during the downs for sure, when there's, a lot of fear going on in the market for solid companies that I've done my, research on and everything, not just anything. And I have been adding a little bit when it got down around 27 and low $28, things like that earlier this year, like within the last month or so. But this is one I definitely want to increase my position in. And so I'm just kind of dollar cost averaging and It's going to drive my average cost up, of course, but it's a long-term investment for me. So it's not that big of a deal. Like I said, if the stock price went below my average cost, I would increase it even more. So this is actually a stock that's down year to date, around 13.86%. So it was above $30 per share. And so it's trading at this level right now. So that's one of those things where it's like, okay, this company I want to own more of, yeah, it's above my average cost, but it's down for the year. And it's reached its high, it's done this, it has an intrinsic value of this, and you do different research, book value, look, PE ratio, the PB ratio, price to book ratio. So there's things about certain companies that I'm like, oh yeah, I want to own more of, regardless if it's above my average cost or not. And if it's below my average cost, then I want to own even more of it. So yeah, Bank of America. I won't make this video about the stocks I own or anything, but I did want to mention the stocks in this list that I do own and my thoughts about where I want to do with them, if I'm buying them or selling them or anything like that. So both of the stocks that I own on this list, I want to increase my position on for sure, and Bank of America is definitely one of them. So yeah, and of course with the dividend increases, several of these banks, went up a little bit with the announcement of dividend increase, because that shows, positivity in their financials, and investors see that and go, oh yeah, good, I want to own more, I feel good owning this bank, let's buy more of it, things like that. So those are things that can drive prices up. Sometimes, around the ex-dividend date, where investors try to get more of the stock or try to go into the stock to obtain that dividend, you'll see the price of a stock go up before the ex-dividend date and then go down after a certain date where you don't have to own the stock anymore to get, the dividend payout. So there are different factors that go on with dividend stocks, with the pricing of them. And of course, they're tied to the macroeconomics and their own, financial statements and their reports and everything like their earnings. So yeah, but that is it with the video, you all. Hope you all enjoyed it. The 7 major bank stocks that have recently announced a dividend increase after the Federal Reserve stress test. Hope you all enjoyed the video. Take care.